Market Prospects, delivering timely information and education to prairie farmers for over 30 years. Market Prospects is brought to you by the University of Saskatchewan's Department of Agricultural and Resource Economics and these sponsors. Log on to marketprospects.usask.ca to view past programs and for information on upcoming programs.
Well, with a new year brings a new outlook on the markets. Joining me now from Quebec City is Vice President and Chief Agricultural Economist with Farm Credit Canada, Dr. J.P. Gervais for Market Prospects. Thank you for being a part of Farmgate today.
Oh, my pleasure.
Let's jump right in. Let's talk about the current overall state of agricultural commodity markets and prices, especially as they affect the grain, oilseed, and pulse crops on the Canadian prairies.
Well, the current state is I would say, good. I mean, we had some issues in 2016, obviously, some quality issues, some yield issues as well for producers. But overall, if you look at volume, that's been decent. Pricing is down from the 5-year average from most crops. We can look at a few pulse crops and actually find that prices are way above the 5-year average. But overall, I would say that prices are generally down. If you think of wheat, I think we're probably a couple of years away from some sort of rebound in the wheat market. Canola is tight, but it's supportive of prices, especially given the strong demand for oilseeds in the world market. So overall, prices are decent, yet down a little bit from the 5-year average and volumes down. So when we have the final set of numbers for 2016, we're going to see income or crop receipts coming down a little bit from the 2015 year, which was really good. But overall, I think it's a pretty decent year in 2016, and we have a lot to look for, thinking about 2017.
And what are the most important economic factors that are affecting and will affect Canadian prairie farmers as they continue to market the 2016 crop and are moving on to the next year's crop?
Right, I can think of two things. First of all, we'll have to look at the commodity market. We have an abundant supply of commodities, and after all, it's always about supply and demand. So demand is really strong. I'm not really worried about anything at all on the demand side of things in 2017. So it really is about supply and the supply coming online in 2017. So first off, we're going to look at the crops in South America, and we're actually looking at what's going on in Brazil and Argentina. Argentina having some sort of weather issues. Brazil appears to be okay for now. And that's going to really set the tone for that next crop year in the United States and in Canada. So, starting off in the United States, we're going to look at the mix of crops, which will be determined by the ratio of soybean prices to corn prices. A lot of forecasters are expecting corn acres to be coming down this year. I always say never count out corn. So we could see a bit of some sort of a decline in acreage in corn in the United States and a bit of a upward trend in soybean acreage. And so obviously that will have an impact on farmers in the prairies as they think about their own crop mix. So that's one thing to consider moving into that next crop year. The second thing would be the Canadian dollar. That's been one of the variables that's been really supportive of Canadian farm revenues in 2016 and before. And for 2017, we expect the Canadian dollar to average 75 cents against the US dollar, which is really good. I think it's supportive of farm revenues. It's supportive of farm income. It makes our products more competitive in foreign markets. And as well as it allows us to convert those US prices that at the end of the day are all based off the US dollars, or those commodity prices are based off mostly off the US dollars. So it allows us to convert these at a more favorable exchange rate.
And we talked about some selling prices. What's the situation and outlook for farm input prices this year in Saskatchewan and on the prairie provinces?
Well, of course, I was just talking about the Canadian dollar. So on the flip side, it's a good thing for revenues. On the flip side of this, it does create a bit of an upward or inflationary pressure on farm input prices. So if we think of energy prices, we expect energy prices to be up in 2017 by as much as 5%, depending on where you are located. And part of that increase is actually a function of the Canadian dollar as well as the entire dynamics in the oil market. So the oil market does have a big impact not only on energy costs, but as well as some other inputs that producers need to purchase for the forthcoming crop year. So we think that input prices are going to be slightly up, perhaps as much as up as 5%. And that's partly the result of the Canadian dollar. So the Canadian dollar does increase the cost structure of producers, but I think at the end of the day, the overall impact of a weaker Canadian dollar than average is actually a good thing for prairie farmers.
For sure. What else should our farmers consider when choosing a crop mix and looking at contracting production before seeding this spring?
Well, I mean, there's a lot of, it's no secret right now as we speak, there's a bit of uncertainty with regards to the world economy, and there's a pushback against trade, pushback against globalization. And so this is something that Canadian producers need to monitor. What is going on outside of our borders does have a big impact. For example, the relationship between the United States and China. China is being such a significant buyer of commodities, of oilseeds in particular. That does have an impact in the world markets and ultimately on the price that Canadian producers receive. So the key here is to have a sound marketing plan as well as a financial plan. Be aware of your cost of production, be aware of your working capital position, and make sure to stick to your plan that support a viable solution for your business moving forward in the 2017 year.
Vice President and Chief Agricultural Economist, Dr. J.P. Gervais, thank you so much for joining us today. It was a pleasure speaking with you.
It's been a pleasure for me.
We've got to take a quick commercial break now, but don't go away. Farmgate returns in a moment.